Hi there. The numbers are out for the month of September. Let's find out what happened in Toronto's real estate market. All right, let's take a look at what happened in the month of September in the Toronto real estate market. So, the headlines, you'll hear this all over the place. Market, or I should say, sales are down 35%, active listings are up 69%, and the days on the market went up by 50% from 16 to 24. But as you know me, and by now hopefully my style is to dissect the numbers and take a look at the data um, specifically to specific areas, geographic areas in the city. So Toronto for the 416, the detached was up 4.4, semis 5.2, and then townhomes 4.8. But you'll see that the condo market is still experiencing very strong growth, and that's due a couple of factors. There's affordability, because you can see the average is 554. If somebody's looking for a ground level type of housing, they're looking at 935 to 1.355. So it's close to that million mark, which is not affordable for a lot of people. So that demand shifts down, pardon me, from ground level down to the condo space. And this is why you see that 24% strong appreciation. This is not sustainable, obviously, for the long term. Probably will cool off sometime in the future, but for now, the condo market in the city of Toronto is very strong. What's pretty interesting too is you're seeing similar, not as high, but still, that's a double-digit increase for the condo market in the 905. So let's take a look at a few things. Oh, one thing, I should say a couple more things here, um, is you'll see that the City of Toronto's employment up 1.6. So we always look at economic fundamentals. What drives the housing? You got immigration, number one, employment, and then interest rates. So if you look at overall GDP again from Q2 was 4.5, but specifically in Toronto, employment was up by 1.6%. That's a good thing. So jobs, more people having jobs, more people can afford to buy, which is a good thing. The Bank of Canada interest rates benchmark rate, say, went up to 1%, which effectively means that prime is 3.2. So even with the benchmark going up by I should say twice in the last little while, the variable mortgages, you can still get them at prime minus 0.5, prime minus 0.6. So you're looking at the 2.7, 2.6 range, and historically that is considered free money. I mean, if you think about inflation at 1.5 to 2%, and then you're borrowing funds at 2.5 to 3%, half a point above inflation, that's in my books, that's free money. So things are still affordable, and the economics are still there. We have good jobs, employment growth, low interest rates, and strong immigration into the city and the GTA. So I've read multiple reports where they've discussed out of the 300,000 approximately that moved to Canada, 100,000 out of those moved to the GTA. So not just Toronto, but the Greater Toronto area, which is good thing for the housing, because that is future demand for people to buy homes. So let's get into a little bit more details with respect to sales to new listing ratios. Again, between 40 and 60% is considered a balanced market. Below 40 is a buyer's market. Above 60 is a strong seller's market. So in this city, in Toronto, for detached houses only, you're looking at 32%. So that's, I'd say actually that's a buyer's market. Yeah, 32 is below 40. It's a buyer's market. So I guess it's a good time to buy. For it depends. It depends on your circumstances, but it's at 32% sales to new listing ratios. So it puts it into a buyer's territory. In York region, it's a little bit different. It's lower at 22.7, and then I don't know, I picked a couple of neighborhoods that stood out. So Aurora at 16.9, that's very low. You see there's 27 sales, 160 new listings, so that's just under 17%. If you're a buyer, that you can get a good deal and negotiate in Aurora. King City at 19.4. Now King City is a little bit different because you can see the average price of a property there is 2.2 million versus Aurora 1.4. So it's a different market, and that explains why if you scroll over here, you see that 56 days on market to sell a property. So it's approximately 2 months to sell a property in King City. And again, it's because the prices are higher compared to surrounding areas such as Aurora, Newmarket, Richmond Hill, and all those neighborhoods. Let's jump back to the city of Toronto. So here is where, again, we're looking at detached. The two areas that I look at closely are detached and then condos in the city. So for detached housing, the west part of Toronto, you'll see 32%, central Toronto 28%, and east Toronto, so the beach and Scarborough 35.5. So all those are pretty much in buyers territory. The market is I would consider it balanced because we've had a very strong unsustainable first few months out of the year, and now it's cooled off, which is a good thing because 20-30% appreciation is not healthy and not sustainable, and that would have resulted in a crash, a big correction. But having a market that's balanced, appreciating at 4, 5, 6, 7% is healthy and sustainable because the economics are there, which are employment, low interest rates, and strong migration. If we look at the condo market, so this is condos C1, C8. So C1 is west of Yonge, south of Bloor to Dufferin, down to the lake. It's pretty much at sellers, 60%. It's very close. So, and this is why condos are flying off, and you'll see they're selling about 2% over asking in about 3 weeks is how long it takes to sell. C8 is east of Yonge, south of Bloor, DVP, down to the lake. And again, that's 100% of asking, 19 days, so pretty similar days on market, call it 3 weeks. The average prices are pretty close, 633. It's a little bit more expensive on the west side versus the east side, but the condo market is pretty strong. It's close to that seller's territory, which is at 60% mark. So you can see both are 59 and change, and then 58 and change for C1 and C8. So let's talk about the media. I want to show you this statistic here. So you'll see sales are down 35%, which is true. So you can see 6,300 for month of September, this past month, versus September 2016, which is 9,830 sales. So that's a 35% drop. But I like to look at trends. If you look at last year, we had 113,000 transactions in the GTA, which is an all-time high. So if you look at the last, 12 years, since 2005, 84 all the way up to 101, and then last year, 2016, was 113,000. So that's an all-time high. So anytime you compare data off the peak, it will always be negative. So per my previous video, you'll see that the media will always talk about 35% down, 30% down, 40% down, whatever the number is. And that will continue right through to probably till next spring when we start maybe May, I would say, of 2018, where the numbers will start to level off with respect to this up or down with respect to sales. So it's, the media has got to do what it's got to do, but you got to look at the trend. So again, if you look at the last 12 years, it's been trending up, 84,000, 83, 93. There was a spike in 07. And then you can see up to 101, 2015. And then last year, 2016 was through the roof, which is 113,000. So we got to keep things in perspective. The sky is not falling. There are definitely buying opportunities. But, you got to dissect the numbers, look at the specific geographic neighborhoods where you want to buy, and then analyze what's the trend, what's happening, what's the average price, what's selling, what's all that details that comes with proper analysis. Let's see what else. I think that's pretty much it. But again, I just want to kind of step back and show you the big picture and understand the general trend. So yes, sales are down and all that good stuff from 2016, which was a record year because we had 113,000. But we gotta look at trends because really a trend is what tells us the full story. So another thing to keep in mind is, as these sales numbers have increased over the last few years, keep in mind every year we have approximately 100,000 people moving into the GTA. So if you can imagine, we have a green belt that locks the land, which is a good thing environmentally speaking, protects our clean air. we have a limited amount of land, and we have 100,000 people moving in every year. We have a bigger population that needs housing, and there is no more land to build. So So you can see that these prices will continue to appreciate, pending any global disasters like the credit crunch of '08. But as population growth continues due to immigration, we have strong employment diversity in this city, and interest rates will rise, but as long as they rise gradually, then the housing market is on a solid foundation. The one risk, I should say, that the federal government's talking about is changing the rules for mortgage qualification for anybody who's putting 20% down or more. So right now you can go out and get a fixed mortgage rate at, let's just call it 3%. You qualify at fixed mortgage. So you qualify at 3%, and that determines your purchase price. What the government wants to do is do a plus 200 basis points qualification rate. So even if you borrow at 3% and you're putting 20% down or 25% down or more, you'd have to qualify at 5%. So whatever the contract rate is, plus 200 basis points. So the reports that I've read from bank economists, that would impact the purchase power of buyers by negative 18 to 20%. So what is it, October 4th today? Keep that in mind. That should be coming down the pipeline from the feds, but that would impact the qualification of any buyer who's putting 20% down or more in the GTA or in the city of Toronto. So I highly advise you to speak with your banker, with your mortgage broker, figure out your qualification before these rules come in place, and establish your budget before any changes happen. Hope you found this video to be beneficial, and if you have any questions, would love to connect with you at any time. You can reach me at 416-887-2708 or at urbancityproperties.com. Bye for now. One more thing before I forget. If you like this video, please share or like. Or if you're watching on YouTube, please subscribe to my channel. Thank you.